Hi, and welcome to Crypto for Advisors, a podcast by Synergist. More than a third of Australians are into crypto, yet nearly 90% of advisors will not discuss it with them. I believe this is exposing investors to unnecessary risks, compromising the value of advised relationships, and limiting investment performance. My goal is to educate advisors and investors to bridge this crypto service gap while strengthening advised relationships. So let's get into today's episode. Hi everyone, and welcome back to Crypto for Advisors, a podcast by Synergist. Today we're diving into a topic that's been dominating crypto news for the last 12 months, the Trump administration's full throttle push into crypto, and what that means for Bitcoin and digital assets more broadly. With Trump's big, beautiful bill being waved through last week, it seemed like a good time to get up on the balcony and cast a critical eye over the landscape that we find ourselves in. Before we go any further, though, I want to make it clear that this isn't about supporting or opposing Trump. We're not here to wave political flags. Regardless of what you think personally of Trump, our job is to really observe it and make sure we're filtering and interpreting what is happening through an investment lens. So, let's start by thinking about what exactly has his administration done. What is real versus headline hype, and what could all this mean for market sentiment and the future of Bitcoin? Let's unpack it. So let's start with the core actions that have already been taken. On his first day back, President Trump set the tone by replacing key regulatory leaders. Gary Gensler stepped down as SEC chair, replaced by Mark Ueda. Commissioner Hester Peirce, sometimes nicknamed Crypto Mum, is now leading a task force explicitly focused on supporting digital asset innovation. Then came Executive Order 14178, which fundamentally reshaped the regulatory landscape. It revoked restrictive orders and frameworks from the previous administration. It explicitly banned a US central bank digital currency, or CBDC, signaling a preference for private sector innovation over a government-issued stablecoin. And it established a new presidential working group on digital asset markets, tasked with recommending a comprehensive regulatory framework by July, where we find ourselves now. On top of this, the administration announced the creation of a strategic Bitcoin reserve, stocked with about 200,000 Bitcoin seized through forfeitures, which is around $21 billion worth at the time of the announcement. This was interpreted by the market as Trump doing the bare minimum to tick off his campaign promise, but insiders are talking about his working group looking into how to build out this reserve within the restrictions Trump applied, that more Bitcoin can be added as long as it doesn't cost the taxpayer. Interestingly, the US states are not waiting for federal leadership. Since the start of 2025, 26 US states have commenced their own state-based Bitcoin reserve legislation, and 3 states have successfully passed their bill and enacted it into law: Arizona, New Hampshire, and Texas. Next, let's talk about the financial plumbing that supports this market. The SEC rescinded Staff Accounting Bulletin 121, which had previously made it hard for banks to offer crypto custody services without burdensome balance sheet requirements. Basically, they had to treat any crypto as a liability instead of an asset. The Office of the Comptroller of the Currency also stepped in, issuing a letter clarifying that banks can engage in crypto custody and related services, providing they meet risk controls. Perhaps just as critical, the SEC dropped high-profile lawsuits against Coinbase and Robinhood's crypto business, while the CFTC declared it would halt regulation by enforcement. So what does all that mean in plain English? Essentially, these shifts are about turning an unpredictable, often hostile regulatory environment into one where institutions can participate more confidently. Even though the big, beautiful bill wasn't a crypto-specific package, it plays a supporting role. The bill focuses on fiscal expansion and infrastructure spending, injecting significant liquidity into the environment. Historically, such moves stir up inflation concerns, and when investors get nervous about inflation, assets like Bitcoin often benefit due to their hard money narrative. That said, this isn't guaranteed. Bitcoin's performance as an inflation hedge has been mixed historically, depending on market cycles and broader macro trends. Still, in combination with all these regulatory shifts, the bill reinforces a sentiment shift.
Bitcoin isn't just a fringe speculative asset anymore. It's increasingly seen as a legitimate macro hedge and portfolio diversifier. So, how is the market actually feeling about all of this? A HarrisX poll from June showed that 73% of crypto investors approve of the administration's crypto policy positions, and 71% believe these policies have positively affected crypto's legitimacy as an asset class. Institutional inflows also tell the story. Bitcoin ETFs, or exchange-traded funds, saw over $1 billion US of new investments within 2 trading sessions following the policy announcements. The cumulative inflows are now more than $49 billion. The sentiment is clearly more bullish, with traditional finance players becoming more comfortable allocating to Bitcoin. We're seeing an alignment in the US between regulatory clarity, institutional infrastructure, and investor appetite. But, and this is a big but, Bitcoin is still volatile. Policy clarity does not guarantee smooth upward price movements, and price swings of 10% or more in a single week are very much still on the table. Looking forward, the next big milestones include the Congressional Crypto Week in mid-July, where the Clarity Act, the Genius Act, and the Anti-CBDC Act are all scheduled for votes. And also the Presidential Working Group's final regulatory framework report is due late July. These milestones could further solidify institutional confidence and lay the groundwork for longer-term regulatory stability. However, global macro events, geopolitical tensions, and market-specific shocks can still change the game overnight. So for investors, this is a moment to stay informed, keep risk management front of mind, and don't get caught up solely in political noise. To wrap up, the Trump administration's pivot on crypto is historic in scale. Whether you love it or hate it, it's materially reshaping how the world views Bitcoin and digital assets. Remember, this isn't about taking political sides. As investors or advisors, our job is to observe, assess, and adapt, not to cheer or boo from the sidelines. So, thanks for tuning in to Crypto for Advisors. If you enjoyed this breakdown, please subscribe, share, and reach out with your thoughts. I'll see you in the next episode.
This podcast is for informational purposes only and does not constitute financial advice. All views of Andrew McPhee and his guests are their opinions only and do not reflect the opinions of Synergist. You should not treat any opinions expressed as a specific inducement to make a particular investment or follow a particular strategy.